the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the chip shortage is no crisis for NVIDIA. Shares of the world's largest chip maker spiking after hours on a strong forecast. We'll dig into the company's bet on the metaverse and the status of its bid to buy UK chip maker ARM. Plus, while other tech giants say the metaverse is the next frontier, Sundar Pichai sees Google's future in its oldest offering, internet search. My exclusive conversation with the CEO of Alphabet about the company's next trillion-dollar opportunity. And Amazon Web Services CEO Adam Selipsky joins us to talk about the changing of the guard, what he has to say about Andy Jassy succeeding Jeff Bezos and his vision for managing the flight to the cloud. We'll get to all of that in a moment, but first let's take a look at the market. Stocks falling on concerns inflation will threaten a global economic rebound, forcing central banks to raise interest rates sooner than expected. Our Kriti Gupta has been digging through the markets today. Kriti, what are you seeing?
Well, Emily, a risk-off session for sure. You saw the S&P 500 closing in the red, and big tech did not come to its rescue, even though you saw some of those names, Tesla, for example, higher on the day, but really dragged down when you're talking about big tech by what was going on overseas. There's Chinese ADRs really falling and dragging the New York FANG index lower, really off lackluster earnings coming out of Baidu in particular. And you really saw some of the money going into treasuries. And to really reinforce that risk-off theme, you can see even cryptocurrencies didn't do so well. As a risk sentiment gauge, they performed pretty in line with what the markets were telling, which brings me to volatility. How much more can we expect going into the holiday season, or are we kind of done? And this is going to be a crucial point when we're talking about the markets in particular, because you can see we have had several spikes throughout the year, but this starting to slow down. That white line is tech, or the NASDAQ 100 volatility in particular. So tech volatility, essentially, you can see that spiking up just a little bit, and a lot of that has to do with the EV boom. So you're really going to want to watch that divergence between the broader market, really measured by the VIX, versus tech in particular, measured by the VXN. And I want to get to some micro stories because earnings are still trickling in, Emily, and still is all about that forecast. Let's kick it off here with Cisco down 5% after hours, falling on a lackluster revenue, saying they can't meet demand simply because of those supply chain shortages. They don't have enough components to be able to do that. But to the upside, you had Sonos coming out with a pretty strong forecast, better than expected, especially in light of this holiday season. So those shares are rallying after hours. And lastly, we have to talk about NVIDIA actually performing a pretty good revenue forecast as well, really saying that their diversification of chips really helped them in the last quarter, Emily.
Alrighty, Kriti, thanks for the roundup. I want to stick with NVIDIA results and bring in our Ed Ludlow joining us now from London. Ed, what are your main takeaways, especially where NVIDIA did well?
Yeah, I mean, Kriti's got it spot on. The forecast for the coming quarter is $7.4 billion, well ahead of what analysts were expecting. But this is the key story for NVIDIA, right? There is demand for their graphics chips, GPUs, and that's particularly the case in data centers where revenue grew 55% year on year. They also boosted margins because, frankly, they're selling their more expensive stuff, their higher end chips, which is helping on the bottom line. I thought it was really interesting, though. They said that they had year on year revenue growth in crypto mining related products and chips, but sequentially, quarter on quarter, it actually dipped. And while they didn't say it explicitly, they mentioned that they were susceptible to volatility in cryptocurrencies, lower volumes. And wasn't it just last week, Emily, we were talking about lower volatility and lower volumes in the crypto market? So I thought that was an interesting little tidbit.
Volatility in the crypto market continues, apparently. Talk to us about where they're not doing well. And of course, there are concerns about the slowness of this, the closing of this deal with ARM.
Concerns, but you see there the stock in after hours up as much as 4.3%. They were pretty transparent about ARM. They said that in particular they were working with the FTC, the Federal Trade Commission, with some compromises, as they put it, on concerns the FTC has. You'll remember Bloomberg broke the news in February that the FTC was looking at a probe into the NVIDIA ARM deal. Of course, on Tuesday, we got news that the UK regulator is also looking into the deal, but from a national security perspective. And this is what NVIDIA had to say, the CFO in her comments, that they acknowledge the concerns, not just by those regulators, but also some competitors. But same language as last quarter. We continue to believe in the merits and benefits of the acquisition to arm its licensees and the industry. So some fighting talk, but these are ongoing concerns from Wall Street about what kind of involvement, what kind of action regulators will take if this deal is ever to get over the line.
All right, Ed, thanks so much. Moving on. Earlier this month, Alphabet surpassed a $2 trillion market cap. Where's the next $1 trillion in growth going to come from? I sat down with Alphabet CEO Sundar Pichai in an exclusive interview to talk about Google's biggest moonshot, Facebook's continuing controversies, and whether the search giant will have a role in the metaverse. This for Bloomberg's New Economy Forum in Singapore. Take a listen.
We've been on as a company, we are trying to do more with less data. One of the biggest changes we made was making auto-delete the default setting for new users signing in, and now over 2 billion users have their data continuously being deleted. Look, we rely on trust for people. Every day when people come to Google, they place their trust in us in vulnerable moments. It may be a health issue on which they are trying to understand. There's no more important responsibility we have than doing right by that trust. When we provide Gmail to journalists and realize that their accounts may be under attack by an authoritarian government, that's what motivates us to make sure, be it privacy, be it security, be it trust, we are doing the right thing. Over time, regulation will have an important role to play here. I think privacy regulation is important. In areas like AI, regulation will be important. And so I think those will be part of the answers as well.
Facebook and Microsoft are all in on the metaverse. What do you think about the metaverse? What's Google's metaverse strategy?
It's always been obvious to me that computing over time will adapt to people and people adapting to computers. You won't always interact with computing in a black rectangle in front of you. So just like you speak to people, you see and interact, computers will become more immersive. They'll be there when you need it to be. So I've always been excited about the future of immersive computing, ambient computing, AR. And we are
Does that count as the metaverse? Is that what that is?
Metaverse is, I think it means different things to different people. The way I think about it is evolving computing in an immersive way with augmented reality. As part of that, there'll be many experiences, some of which will be immersive, interactive virtual worlds, which is the metaverse concept. And but I think this doesn't belong to any company, right? This is the evolution of internet and the web, the internet. All of it will continue to evolve.
Google just hit a $2 trillion market cap. Alphabet, I should say. Where is the next $1 trillion going to come from?
I've always felt, your market cap valuation is an effect of the value you provide. And I feel fortunate our mission is timeless. There is more need to organize information than ever before. I still feel search is our biggest moonshot as a company. People will want radically more conversational experiences. They will want what we call multimodal experiences. They may speak to search. They may look at something and ask what the information is. Being able to adapt to all that and evolve search will continue to be the biggest opportunity. We are so excited about, be it YouTube, cloud, our hardware products, Google Play. So we're building a diverse set of businesses, and underlying all of it is the investments we are making in AI. We've invested $100 billion in R&D in the past 5 years. And so applying AI in a deep way is probably where we will create the biggest opportunity ahead.
Now, one of Google's fastest growing markets and fertile ground to develop its biggest moonshot is the Asia-Pacific region, home to Singapore, where, of course, we hosted this year's new Bloomberg New Economy Forum. While millions of new users are coming online there every year, U.S. companies like Google face tough competition from China. Pichai also addressed the opportunities and the challenges in the region that lie ahead. Take a listen.
It's such a fitting time frame. I'm glad you're focused on the region. It's the most vibrant region we see. It's our 20th year since we opened our office in Tokyo. It was the first office outside the Bay Area. You have 2.5 billion people on the internet. there are many areas in which they're leapfrogging trends which are here and embracing the future. Digital payments is a great example. So many of our products originated from APAC, Google Maps, Google Pay. A lot of our journey to bring computing to more people is playing out in Asia as well. I am excited about also the work we are doing through cloud, because the companies there are rapidly transforming themselves digitally. So a chance to provide that is something very exciting for us. So super dynamic region. I feel like we are learning as Google, being in the region. And so I think it'll transform. The first 10 years, I would have said we took products here and brought it to APAC. Over the past few years, we are beginning to build things there. And some of our future global products will be APAC first and rest of the world later.
You can't talk about APAC without talking about China, and you're facing stiff competition from Chinese tech giants there and beyond. What should U.S. policymakers know about competing with China?
You know, there's a lot of conversations about U.S. and China. The competition is fierce. When you look at areas like AI and quantum computing, where we are investing a lot, you know, the Chinese companies are neck to neck. What I think about, you know, I was encouraged by the news coming out of Glasgow about the U.S.-China agreement on climate. To me, while we talk about all the areas where we are competing, some of the biggest areas which are common challenges for all of humanity. The pandemic was one. AI and AI safety over time will be a shared one. Obviously, sustainability is another area like that. So I think these are all areas in which the countries can come together. And so I think that's a way by which we think about as, you know, when we compete on the internet, and there may be different visions of how the internet plays out. So I see opportunities both sides.
What are the chances that Google Search will ever come back to China, or that Google Cloud would ever come to China?
You know, today we don't provide most of our signed-in services in China, and I don't see that changing. But you know, there are ways, as I said, in areas like AI or sustainability, I think there'll be opportunities for us to work together. Through cloud, we will support multinational companies which have presence everywhere. And so maybe there are opportunities to work that way as well.
That was Alphabet CEO Sundar Pichai speaking on behalf of the Bloomberg New Economy Forum. We are going to have the full conversation of that interview airing later this month, November 29th, on the latest edition of Studio 1.0. You don't want to miss it. Coming up, crypto in flux as Bitcoin and Ethereum both retreat from last week's highs. This as the SEC gets aggressive in pursuing crypto regulation. We're catching up with the co-founder of Ethereum and also a founder of the blockchain technology company CONSENSYS. Next, this is Bloomberg. Cryptocurrencies have suffered a broad retreat from recent record highs. Bitcoin briefly dipping below 60,000 and Ether touching its lowest level this month. Tracker CoinGecko Global says the crypto market's total value dropped some 10% in 24 hours to about $2.7 trillion. Crypto-centric stocks also taking a hit, with Coinbase, MicroStrategy, Marathon Digital, and Riot Blockchain all lower. For more, I want to bring in CONSENSYS founder and co-founder of Ethereum, Joseph Lubin. Joe, great to have you back with us. So first of all, what do you make of the latest moves in Ether and Bitcoin? Why are we going backwards?
Well, I think we're going forward. It's just that our ecosystem is volatile, and it's volatile in an exponential and nearly generally up direction. So if you look back 7 days, we're down. If you look back 30 days, we're up over maybe 3,800. If you look back 7 years, we're up about $500 billion.
Fair point. So what's next?
What's next? So our ecosystem continues to grow wonderfully and excitingly. We seem to come upon a new paradigm shifting or foundational construct. A little over a year ago, DeFi really crushed it, maybe 18 months ago. DeFi 1.0 took on tremendous impactful importance. The NFT phenomenon has been just spectacular. DeFi 2.0 is starting to hit the scene. So it's taking a different, more sustainable approach to DeFi. Decentralized organizations are starting to be enormously impactful, and that's an incredibly exciting development in our ecosystem, because we've figured out how to decentralize the trust layer, making it possible for the world to have a trust foundation and to bring democratization to the decentralized finance infrastructure for the planet, and really bringing these decentralized organization constructs to bear. It's going to transform things.
Well, this is in part where CONSENSYS comes in. You're being backed by a number of new investors, massive round. Dan Loeb's Third Point, for example, valuing you at $3.2 billion, in part to help with the development of Web3. How is CONSENSYS going to help us get there? Where is the growth going to come from?
The way we think of our business is that we operate a flywheel where we build a bunch of developer tooling that enables us and our community to build applications on an open source, decentralized global super app. And then in MetaMask and MetaMask Institutional, we provide the user interface to that super app. And so growth from our perspective comes from our ecosystem creating new DeFi primitives and us offering those to our different kinds of users, bringing this NFT phenomenon to bear in both artist communities and sports communities. So it's we're seeing growth in so many different directions, and we have a pretty strong enterprise focus as well to join our consumer focus.
What does a metaverse powered by blockchain look like?
So it looks like open, decentralized protocols. It looks like tokenization of many things or all the things. It looks like interoperation, so that you can take your digital assets and move them into different regions of the metaverse. It looks like decentralized governance. Essentially, it looks like a metaverse of user-centric protocols, user-centric social networks or social graphs. It looks like people and small organizations having real economic and political agency, as opposed to the Web 2 world that we live in, where major technology organizations own the platforms, control the platforms, and can deplatform people from the platforms.
Quite a vision, Joe. Much, meantime, before we get there, is being made of the competition between Ethereum and Solana, some going as far as to say Solana is an ETH killer, that it's going to take the developers and the users away. How do you respond to that?
Solana is a wonderful technology. Near, Polkadot, Cosmos, so many of those platforms that like to think of themselves as layer one platforms are great technologies. They will be important as our ecosystem evolves. But Ethereum has chosen to focus on decentralization, and that's where you get trust from. So maximal decentralization will bring the trust foundation. And those protocols that are actually not competing with Ethereum, they're competing with layer 2 protocols on Ethereum. And many of those protocols will end up being layer 2s on Ethereum, just because they focus on execution rather than security or even data availability. Those are the 3 pillars that you need to focus on as we move into the modular blockchain ecosystem. And Ethereum is the clear winner in terms of security, decentralization, and trust. And it's likely to win the guaranteed data availability layer, and then many protocols at layer 2, which benefit from the security guarantee of Ethereum, are going to get incredibly inexpensive to operate. They're already bringing thousands of transactions per second to Ethereum, and cost effectively.
So quickly, you're saying Ethereum, thanks to layer 2, will become more competitive to Solana?
So I'm saying Solana has a chance of being a really valuable niche execution layer. And whether it sits beside Ethereum or on top of Ethereum, all these protocols are going to interoperate with one another. Solana is a cool technology and an exciting new ecosystem, but essentially we need different kinds of these decentralized database constructs, just in the same way that the Web 2 world has SQL databases and NoSQL databases and graph databases and different tunings of those databases. So Solana will subserve certain kinds of use cases.
Okay, good to hear your viewpoint on that. Joe Lubin, founder of CONSENSYS, co-founder of Ethereum. Great to have you here, back here on the show, Joe. Coming up, more on the Activision debacle as investors and others across the gaming industry are weighing in on whether Activision CEO Bobby Kotick should step down. That is next. This is Bloomberg. The hot seat's getting hotter for Activision CEO Bobby Kotick after allegations that he was aware of sexual misconduct and harassment claims at his company for years and didn't inform the board. Now, some shareholders are asking for his resignation, this following a walkout by Activision employees who want the CEO and other executives to step down. Other gaming companies are also weighing in, with PlayStation chief Jim Ryan telling his employees that he and his leadership expressed their deep concern to Activision and that they do not believe their statements of response properly address the situation. Meantime, cryptocurrency exchange and wallet BLOCKFI is being scrutinized by the SEC. The platform is popular for paying its customers high interest rates for lending out their tokens with annual yields that can go as high as 9.5% compared to the 0.06% average with bank savings accounts. The SEC now reviewing whether BLOCKFI accounts act as securities that should be registered with the regulator. And LeBron James and his teammates are getting a new name for their home court, now known as the Staples Center. Next month, though, Crypto.com will replace the office supply store chain as sponsor. The arena will unveil its new name on Christmas Day during a Los Angeles Lakers game. Bloomberg has learned the deal is worth more than $700 million over 20 years. End of an era. Coming up, what is it like to take over the division your boss helped launch? I ask that question to Amazon Web Services' new CEO, Adam Selipsky, in an exclusive interview coming up next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Amazon gave Visa a 1-2 punch. First, Amazon saying it's going to stop accepting Visa credit cards as a form of payment in the UK starting next year. Now, Bloomberg is reporting Amazon is in talks to switch its own co-branded credit card from Visa to MasterCard, according to Bloomberg sources. Let's get back to London, where Ed Ludlow is standing by with more. Ed, what do we know?
Yeah, so for a long time, Amazon and other retailers have been upset about the fees that they've had to basically absorb every time a customer uses a credit card. And these are the latest steps in that pushback that Amazon is making to the likes of Visa and MasterCard. It played out in the equity markets. You look at the drop that Visa experienced. At one time, it was down by the most since March 2020, and that negative sentiment passed on to others, even though, according to Bloomberg sources, Amazon is considering that switch to MasterCard. But what it comes down to, the grievance is, if I have a high-rate credit card and I buy something on Amazon.com, at the moment, in most jurisdictions, Amazon is the one that covers that cost. They don't pass it on to the consumer. And here's what Amazon told Bloomberg about that. They say that the cost of accepting card payments continues to be an obstacle for businesses. Of course, Amazon trying to play a strong hand at the moment to say it supports merchants on its platform and those striving to provide the best deal for customers. Now, in other jurisdictions, for example, in Singapore, Amazon issues a surcharge. So if I live in Singapore and I use my credit card as opposed to a debit card, then they will charge me for the right to do so. But it's interesting the rules that they've left in place. They are basically trying to encourage consumers to make an active change, to move away from UK issued credit cards to cash cards or debit cards, or if they switch away from a credit card completely, they're offering consumers £20 or 27 US dollars off their next transaction if they make that switch today, because clearly Amazon's a bit fed up of swallowing the cost. Emily.
All right, thanks for breaking that down. Moving on to Amazon's AWS, its rapidly growing cloud division that now boasts millions of corporate customers around the world. I recently traveled to Amazon headquarters in Seattle to speak with new AWS CEO Adam Selipsky, who was also one of its earliest employees. We talked about the changing of the guard, how Andy Jassy will be different from Jeff Bezos, and how Selipsky will be different from Jassy, along with his vision for the platform he helped launch.
We're all different as leaders. I think it's all important that it's important that we all bring our own stamp to it and operate within ourselves. I don't think I would be a very good Andy. I don't want to presume, but I would assume that Andy wouldn't be a great Jeff, because Jeff's Jeff, Andy's Andy, and I'm me. So I think that Andy will certainly bring a great depth of experience from AWS, which is one important part of the business, and having operated that business for so long, and I expect that'll also give him an opportunity, although he was involved in other parts of Amazon, certainly for a number of years, we'll be able to bring a fresh perspective to the whole company, just as I hope to bring to AWS. And I think that fresh perspective is often helpful. I think just the mere act of change is useful for the business, for customers, for employees, and just to shake things up a little bit. So I think just a fresh perspective.
How will you be different from Andy?
Well, I think that the world around us is changing so much that we're going to have to be different. It doesn't matter what we did yesterday. And right after I joined, we actually added 2 new leadership principles, which is very exciting. One's around striving to be Earth's best employer, and the second around focusing on the fact that success and scale bring broad responsibility. And those are things about which I personally am very passionate. And so I really personally look forward to digging in and helping the company to figure out what are those things that we have to figure out. Where can we innovate to be Earth's best employer? And then also to figure out externally, what can we do to really be great citizens of our local communities, to be great citizens of our national communities, and to be great citizens of the global community. And I care a lot about those things, as a lot of other people do here, but I plan to put a good amount of energy and time and focus and hopefully help Amazon innovate in all of those areas.
How closely do you work with Andy day to day? Does he regularly weigh in on AWS decisions or not?
Well, he's got a pretty broad scope of things to worry about now, so he's got a pretty intense day job, I believe. So he's really focused across the company, as you would expect him to be. But that being said, obviously AWS remains an important part of Amazon, and so we touch base regularly, be it in person or via email, just on the most important things going on in the business.
Does Jeff ever weigh in on AWS decisions?
Yes, I mean, really from the beginning. Jeff was involved at the very, very beginning at some of the most fundamental decisions. How do you price EC2? What do you name S3? What does the detail page look like? Obviously, over time, the business grew, and but Jeff was always available when we needed him, and I certainly anticipate that'll be the same going forward.
So is he still available now? And what do you understand that Jeff's priorities are?
Sure. Well, I'll let Jeff speak to his own priorities, but certainly Jeff has been available when, for example, we've been doing our annual planning cycle, as many companies have, and it's been great to have Jeff weigh in on really where we're heading for the next year and beyond, and to just make sure it's easy to get focused on the details of the business, and it's great to have multiple people who can help you pick your eyes up a little bit.
Amazon Web Services CEO Adam Selipsky there. You can catch much more of that interview with Adam Selipsky on the latest episode of Bloomberg Studio 1.0 coming up later right here on Bloomberg Television. We're going to talk about the future of cloud innovation, data privacy, the metaverse, of course, and so much more. And speaking of that, coming up, Termination Shock. That is the newest book from the author who actually coined the term metaverse back in 1992. Neal Stephenson will join us next to talk about that and more. This is Bloomberg. We've been talking about the metaverse a lot, a term coined in 1992 by Neal Stephenson in his book Snow Crash. Since then, from Johnny Mnemonic and The Matrix in the 90s to Tron and Ready Player One more recently, there have been many guesses as to what a world in which life mixed with virtual reality will really look like. Now, Neal Stephenson is out with a new book, Termination Shock, a new thriller in which climate change is out of control and a visionary billionaire has a big idea for reversing global warming, a topic which couldn't be more timely as well. Neal Stephenson joins us now here in the studio, and it is great to have you here in person.
It's good to be here. Thanks for inviting me in.
For joining us. You have a massive following, and you could have written about anything. You chose climate change, which is a topic that the masses have had a hard time really understanding and grappling with. Why did you decide to take this on for your next book?
I think even scientists and people who are technically on the ball can have a hard time getting their heads around the whole topic. So I have kind of got a niche as someone who writes popular fiction about technical subjects, and so I thought it made sense for me to take a crack at this.
The story centers around a billionaire who decides to take matters into his own hands and solar geoengineer the planet using a big sulfur gun. What exactly does that mean, and is that really possible?
So for a long time, all through human history, there have been volcanic eruptions that put plumes of sulfur into the stratosphere, the high atmosphere. And what we've learned over time is that when that happens, for a couple of years afterwards, the climate all over the planet will get cooler until that stuff kind of naturally washes out. So the proposal's been made that we could essentially build artificial volcanoes that do the same thing by artificially injecting sulfur into the stratosphere. And we call that solar geoengineering because the purpose of it is to bounce back the solar radiation that's heating up the planet. Now, obviously, it's very controversial, and not everyone is on board with the idea of doing this. But for me, as a storyteller, that was just more fodder to tell an interesting story. It's not just about doing the engineering, but it's about how other people react.
Now, there are a number of real-life billionaires who are trying to take on climate change as well. Bill Gates, Jeff Bezos. What do you make of the involvement of billionaires? I know you're based in Seattle, and they're both based in Seattle as well. Should we welcome them as a society to this fight?
It's an interesting place that we've got to as a society that we now look to billionaires to take big actions for us. You know, I don't think that was true, say, 50 years ago. But it is true now that a lot of the institutions that we might have looked to, you know, in the 50s or the 60s to take care of our problems, the big government institutions and conventional big companies, don't seem to be playing that role for us anymore. And we've kind of got in the habit of leaning on billionaires to do that. I don't necessarily think that's an ideal way to organize a society, but it is kind of what we've ended up with. And so that's my point of departure for writing this book.
So coming out of COP26, do you think it is more likely we're going to see governments and companies around the world come together on climate action, or governments and companies and perhaps real people like your character, T.R. Schmidt, take matters into their own hands individually?
So I think what's going to happen is that we'll see at least partial implementation of some of the very good ideas and proposals that came out of COP26. And so I think that legitimate efforts are going to be made to reduce carbon emissions and hopefully to move towards a zero carbon emission economy. And that is all great. The more the better. However, the issue is that even if we completely stopped putting CO2 into the atmosphere today, the level of CO2 in the atmosphere, which is dangerously high right now, wouldn't start to go down unless we intervened and began to remove carbon from the atmosphere.
So when is the tipping point for you? I mean, I know you look at 10 years out, right? When do you think the real tipping point will be?
25 years ago.
So it's too late? Is that what you're saying?
I think it's what we have to do now is carbon capture. I think it's all about carbon capture. It's all about, I think it's going to be the biggest engineering project in human history to build the systems that are needed to to pull CO2 out of the atmosphere, CO2 that we've been pumping into the atmosphere ever since the beginning of the Industrial Revolution, and get the CO2 level back down to a livable level. And that is going to take us probably the rest of this century.
Will the metaverse be our escape from climate destruction?
Man, I hope not, because there is no escape. We need to focus on the physical world. We need to get outside.
In your breakout book, Snow Crash, you coined that term metaverse now 30 years ago. What did you envision then? And how do you define the metaverse today?
Well, what I envisioned then was what we would now call a massively multiplayer online 3D world. Just meaning that a large number of people can be in it and interact with each other in real time. And we've seen that implemented in a lot of popular games. So we know that we can do this. The other element that's coming along is sort of implementing that not just on the screen of a PC or a game console, but in an actual 3D virtual reality headset.
What do you think of the tech companies' take on this term that you coined? I mean, we've seen Facebook, we've seen Microsoft. What fails and what succeeds?
Well, I think the first thing to keep in mind is what are these companies actually doing today? Because right now, there is no metaverse. Facebook is running Facebook and WhatsApp and Instagram, but they don't actually have a product that looks like the metaverse yet, and they probably won't for a number of years. So we should focus on what actually exists today, and when they've actually built this metaverse, then we can take a look at it.
Do you trust Facebook? Now Meta, do you trust Meta to do this?
Well, it depends on what you mean. Yes, in the sense that I think they'll probably build something, but I don't have a high opinion of their business model, which is all about getting people to use a free application or multiple free applications, because when you're using a free application, you are essentially contributing labor to their product. You're building their product for free, and what they're selling is your eyeballs. They're selling your attention and your information to advertisers who are their actual customers. So that's a business model that, as we've seen, can lead us into some less than desirable consequences, and I would like to see them change that before implementing the same business model in a highly immersive, three-dimensional environment.
Well, there is grave concern on that note that the metaverse will replicate the worst of society, as we have often seen on social media. What are your biggest fears about the metaverse of the future, whether Facebook builds it or not?
Well, these devices can gather a lot of information about you. And so even when you're just scrolling through a website on your laptop or your phone, these things are collecting a lot more information than most people realize. If you linger and you look at a particular screen for a little bit, if your mouse sort of lingers over a button, even if you don't press that button, they're collecting data about what has attracted your attention. And VR headsets and AR headsets can gather a whole lot more data. So
you think our privacy, our personal information is even more at risk in the metaverse than it is now?
For sure, for sure. If the companies that build it keep running on the same business model that we see in the case of classic social media applications.
Is your view of the future utopian or dystopian?
I think we've got a rough few decades ahead of us, largely because of climate, and largely because of the breakdown in our kind of social institutions, how government works, how democracy works, that we've seen as a result of the polarization of opinions, which I think is largely a social media phenomenon. It's bad actors gaming the internet to deliberately mess things up.
So you're a short-term pessimist? Is that what you're saying?
I'm a short-term pessimist. I do think that, that eventually we're gonna pull out of it. There's, you know, every time a new communications medium sort of comes into use, it doesn't take long before sort of bad actors latch onto it and begin to use it to create trouble.
Do you feel any amount of responsibility or even pride in putting the term metaverse out there all those years ago?
I put it out there. It's, as you say, 30 years ago. It was a plot device in a book, and I'm happy when people read my work and think it's cool and want to try to build something. You know, if it inspires them or motivates them to work on a project that excites them, you know, and that gives them fulfillment, that is all great. Obviously, I can't control the direction these projects all go.
You also wrote a book about crypto back in the 90s.
Yeah,
so
Cryptonomicon, yeah.
Where's it going?
So in that book, it was based on a kind of earlier idea, a pre-blockchain idea of how cryptocurrency would work, which was that basically you had to have a room somewhere, a secure facility where you could have your servers that was kind of immune from government interference. And that made for some fun storytelling, because I got to send my nerd characters out into different parts of the world to build these facilities. Of course, what we've ended up with blockchain is that you don't need that. They've found a mathematical scheme that distributes the system over the whole world, and so in that sense, what we're seeing today is a new generation of how cryptocurrency works that's more capable than what I talked about. But I kind of follow it, you know, it's kind of interesting, but I can't keep up with all of the different, you know, initial coin offerings and other things that are popping out of the woodwork.
Well, it all goes to show that we should listen to your story, read your stories. So far, they have been very prescient, and we will see about Termination Shock, your newest book about climate change. Neil Stephenson, author of Termination Shock and so many more books. Thank you so much for joining us.
It's been fun. Thank you.
Good to have you. Coming up, big change for Apple. Yep, you can now DIY that busted iPhone screen at home. Bloomberg's Mark Gurman coming up to explain how and, more importantly, why. That's next. This is Bloomberg. Well, the next time you drop your iPhone, don't worry. Now you'll be able to fix it yourself. Apple is finally allowing customers to fix their own devices with a brand new service. Bloomberg's Mark Gurman joins us now. Mark, I can't tell you how many times I've dropped my iPhone, or my kids have dropped my iPhone. Why is Apple doing this, and how does it work?
So why are they doing this? Well, they really had no choice. Over 20 states, I believe 23 to 25 states, have been discussing right to repair laws, making it so that consumer electronics companies and other companies would have to allow consumers and users of their devices to be able to do self-repair. Up until this point, you had to go to an Apple authorized repair center like a Best Buy, an Apple retail store, or other location to get official servicing, to get official Apple parts. Now, with this program next year, they'll start selling those parts, different tools, and of course manuals to consumers to let them do it themselves.
Is it going to really be that easy? Can I trust myself to do this?
Well, I can just tell you personally, I don't want to speak for you, but personally I probably still would go to the Apple store or an Apple authorized retailer if I had an issue. Quite frankly, it's not something that I want to deal with. It could be a lot cheaper probably with Apple Care to go to an Apple store, authorized retailer to have your device fixed. But there were so many laws. The Biden administration has even been talking about this. Apple's been under a lot of scrutiny for not allowing consumers to repair their own devices. So now they're giving that choice. I also think it's going to help their bottom line. Not that they need much help with that, given these pricey parts are probably going to be, or I should say these parts are probably going to be somewhat pricey when they go on sale next year. One thing I'll note, they're starting small. It'll be for the iPhone 13 and iPhone 12. Batteries, cameras, and screens, the most prominent parts that need replacement, and then Macs later on.
All right, Mark Gurman, thanks for breaking it down. We'll see. Thank you. That does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. That does it for this edition of the show. Don't miss Studio 1.0 tonight. This is Bloomberg.